right, well, good afternoon and welcome to November's Broker University webinar. Arizona Realtors is proud to bring you this monthly webinar series designed exclusively for our brokers to learn fresh insights on current topics from their peers. I'm Callie Waterhouse with the Arizona Association of Realtors, and today's webinar is all about E&O insurance, general liability insurance, and cybersecurity with the one and only Lisa Robinson, the president of Pinnacle Insurance Consultants. And folks, we are so very fortunate to have Lisa with us here today. She brings over 35 years of experience in the insurance industry and real estate, with over 20 years focusing on insurance and risk management for real estate firms. Lisa is our go-to resource for the state and the local associations and the Arizona Department of Real Estate Commission when addressing insurance-related issues. Lisa is also an approved ADRE instructor and regularly gives risk reduction classes and seminars for agents and brokers in Arizona. Today's Lisa's presentation will be about 60 minutes. I think we're going to kind of do a discussion type format today. So if you have questions, we certainly encourage you to use the question box feature on your screen like you did earlier, and ask your questions. That way we can get you involved and we can answer as many questions as possible. And as you can see, the question box is on your screen, so you can see what it looks like. So as always, today's webinar will be recorded and available on our website at AARonline.com. Now at this time, I'm going to turn it over to Lisa. And Lisa, welcome.
Thank you, Kelly. It's so great to be here, and thank you guys for joining me this afternoon for this webinar. Really excited to be here and chat with you. And by all means, please, E&O, there's a lot of questions, and I want to answer your questions. So please email, send your questions, and we will try to address them as we walk through the important things we need to discuss. As Kelly mentioned, the purpose of the webinars that AAR, the broker webinar series that AAR is providing you guys is to provide information on key topics that are important to brokers. I would think of particular importance to a broker is asset protection. And so the purpose of today's webinar is to provide information that you need to know about your E&O insurance that a lot of people don't know and understand, as well as other insurance that you need as a DB to ensure you have adequate protection in the event an unfortunate claim strikes. So we all, all business activity has risk associated with it. My business, your real estate business, we're all dealing with risk. And these risks do not go away simply by ignoring them. The best way to address risk is the implementation of a comprehensive risk management program. And a very large component of risk management is education. So all these classes that AAR is providing that you get reduces your risk. However, when the best of risk reduction efforts fail, E&O is the vehicle in which you shift, or any insurance policy is the vehicle in which you shift the financial cost of that claim or lawsuit to a carrier. So E&O is vital to the firm and your agent, and that it is your ultimate safety net and protects your assets. Now, E&O is more important than ever due to the increasing complexities of a real estate transaction and today's litigious environment where people are looking for someone to blame in a real estate transaction when something goes wrong and financial damages are sustained. In addition to the traditional risks in a real estate transaction, today we are faced with new risks related to regulatory issues such as RESPA and CFPB. I know you guys are dealing a lot with RESPA, but we're also, what's even more important is the kickback provision and enforcement of CFPB. That's an issue we've been trying to address and understanding the insurance coverage or lack thereof for that. Also on the radar screen is violations of the Do Not Call Registry and the Telephone Consumer Protection Act. Again, that can come to you by way of a regulatory issue, and there's insurance challenges there. How about drones? You guys dealing with drones? Everywhere I go, I ask the question, and a drone is an unmanned aircraft. Did we know that? It's aviation. And we certainly have insurance challenges. If you are flying a drone around to take pictures of property, you definitely have insurance coverage considerations that you need to address, and cyber issues. So let's start off by talking about E&O. All right. And first we have up there why E&O is important to you, and we wanted to poll you guys to see how important E&O is to you and to your firm. On a scale of 1 to 10, 10 being the most important, 1 being the least, if you could just shoot to Callie what you think on how important it is for you, and we will get back to you on the results of that poll.
So write in the question box. You're going to give us a 1, 2, 3, 4, 5, 6, 7, 8, 9, or 10. Exactly how important do you think E&O insurance is to your company?
Yeah. So thank you. We will look forward to getting that. While you get that over to us, let me give you some information that I have on that. First of all, why is it important? Everybody makes mistakes. We're human. I said it when I just opened up. The environment is very litigious. I'm going to say it again, because people are looking for someone to blame in a real estate transaction when something goes wrong and financial damages are sustained. And I will tell you that that is reflective of the recent uptick in claims that I'm seeing come through my office in the last year to year and a half. Additionally, so that the most common legal dispute involves a buyer of property realizing after the sale that material facts were not disclosed prior to completing the sale. Typically, these disputes involve non-disclosure of property condition. Things like a big claim item these days is sewer septic. A property was represented to be on sewer where it's actually on septic. That's going to be a problem. Or the septic was not functioning or was on another property. Roof leaks, water damage where prior repairs are not disclosed is another example, as well as termite issues, just a small sampling of what we see. So everybody makes mistakes, but the reality is you don't have to do anything wrong to be sued. And that's what we need to grapple with. Even if we think we did everything right, someone can still sue us. 20 to 40% of our claims are frivolous, resulting in an average payout, according to my carriers, of $20,000. So even if you are not at fault, litigation is both time-consuming and expensive. By not purchasing E&O insurance, you and your company can be taking a serious financial risk. Now, I will also tell you that I'm not an attorney, but I did ask the question to an attorney because my understanding, and they did confirm this, is that you have personal exposure. So if you don't have E&O and you are sued, that they can come after you personally and your personal assets. So that might be some information that you have a concern about and you might want to talk to an attorney. And that's even more important relative to why E&O is important. And to determine whether you need your E&O, ask yourself if you can afford to wage or lose a civil lawsuit that is arising out of your professional error on your part, because the American legal system tends to severely punish professional error with large awards. So, Callie, how do we do on our poll?
Well, we're looking pretty good. We had one low number 6, and the majority say either 9 or 10.
Yay, love it.
So that's good.
Well, good. Okay, glad to hear that, and hopefully I can give you information that will be important to you. So let's talk first about your E&O insurance. And the first thing I wanted to hit on is what I call the E&O myth. And, all too often the decision on which E&O carrier to select is driven by cost alone. The less expensive, the better, and no consideration is given to the coverage under the policy. When price becomes the primary focus of purchasing your policy, you may be overlooking important coverage. There is a misconception out there that if you have E&O, you're fully covered for everything you do. This is what I call the E&O myth. Have you heard it? I've got E&O, I'm covered. I hear that often. I think that's the perception of agents and brokers is, oh, I've got E&O, I'm covered, and that is absolutely incorrect. And I'm going to address why in a couple of different areas. First of all, disparity between policies. There is no standard E&O policy. It's not a one-size-fit-all. So if it were a one-size-fit-all, we could base it on price. It's not. There's many different real estate E&O carriers out there that will quote your insurance, and these policies vary widely in the scope of coverage provided. Some are comprehensive in addressing the risks of your firm, and others limit or carve out important coverage. So the informed and prudent broker will work closely with a specialized insurance broker to carefully analyze the coverage and terms that are being offered by these various carriers. You don't want to find out you're not covered at the time you have a claim and a lawsuit is filed against you. It's kind of like you've heard the expression, I got to pass the bill to find out what's in it, right? You don't want to buy your policy and find out what's in it when you have a claim and they tell you there's no coverage. What's the cost of an uncovered claim? We don't know, all right? That's the uncertainty. We know it's very likely if we did nothing wrong, it might be $15,000 to $20,000, but it can virtually be unlimited or catastrophic in nature. So you want to know where your coverage is and more importantly where it's not, and you want to make an informed decision. Now I'm curious, I want to ask this question too if you guys don't mind, knowing that there's disparity between policies, how many of you would pay a little more for better coverage? All right, because it seems that most people are willing to pay more for better coverage. So, are you getting any responses?
Yes, straight across the
Yay.
board.
Love it.
While we have more answers coming in, Lisa, do you know what percentage of brokerages don't have E&O in insurance in Arizona?
Well, that's an interesting question, and I think AAR has surveyed in the past, and the Department of Real Estate has surveyed in the past. The Department of Real Estate survey, ADRE survey, was I think more recent, and I think the commissioner has said along the lines of maybe 40 to 60% might not be covered. I think at AAR the results were a little more for coverage, but I think the reality is that in the rural areas there's probably more people practicing without E&O. In the cities, I find that most people do. And we're going to drill down and see the E&O market's changed. It's very competitive and it's very reasonable. So those that don't carry E&O, I think are going to be missing the boat, and hopefully I can show you that in a minute. So understanding these policies, the disparity between policies, number one, on the E&O myth. Number two, you can't shift all risk. What that means is they're not giving you an E&O policy that says, don't worry, you're covered. And many people think that. Because if you look at any type of insurance policy, there's multiple pages that are saying all the things that aren't covered. They're called conditions, limitations, exclusions. And the reality is, in any policy, there's exclusions relating to other coverage you need. There's exclusions relating to high-risk activities that carriers aren't willing to cover. There's exclusions relating to things such as fraud, intentional acts, criminal acts, unlicensed activity that won't be picked up. So you can't shift all risk. There's going to be things outside of the scope of your real estate E&O. So you have to recognize, again, the E&O myth, that there's things that won't be covered. And then the third piece of that is other policies needed. And I need to hit on that today because we carry E&O. There's a few other policies that we really need. E&O is only one aspect of your protection. So let's talk about what E&O is, and Callie and I were just chatting. When I asked this, we know about E&O, we know it's important. And I said, what is E&O? And the response I get back is errors and omissions. Well, what does that mean? I want to tell you what it is so you understand it. E&O is the insurance that covers you in the event a client or third party holds you responsible for services that you provided or failed to provide in a real estate transaction that did not have the expected or intended result, and your client is financially damaged. Example, you sell a home, you represent it to be 2,000 square feet. In actual fact, the home is 1,800 square feet. Let's set aside the reasons why and that it should have been somebody else's responsibility. You're sued. Remember, you don't have to do anything wrong to be sued. It's 1,800 square feet, so they are filing a claim against you because the house, they were financially damaged because they have 200 square feet less. So that is an example of what E&O does, what it's intended to do when someone is financially damaged because of your negligence. E&O follows your license, your real estate license. If you sell real estate, but you also sell insurance on the site, let's say, your real estate E&O policy is not going to cover you for selling insurance unless you talk to the carrier and get that added on. So it follows the scope of your license. You must have the appropriate license typically to be covered. And if you conduct business other then real estate, it's not likely going to extend. So again, the E&O myth, it doesn't matter what I do, I'm covered. No, very specific to real estate. What does it do? The first thing that it does, if you're sued, you want an attorney to represent you. Those legal costs are what we refer to as defense costs. So it pays the defense costs, which are the attorney's fees and costs associated with defense of that claim, with expert witnesses and all the things that they bring in on the defense side, and damages. Damages that you're responsible for, judgments and settlements as a result of your negligence. If you're found negligent, you'll pay damages. Even if the allegations are found to be groundless, as we talked about, thousands of dollars may need to defend a lawsuit. And this is an interesting statistic that I did want to share with you guys. When we talk about the cost of a claim, when you look at the defense costs, the attorney's fees represent 50 to 70% of the cost of a claim. Now that's important because what that means is that if you have a problem that you want to resolve it before it gets to litigation, because once we're in litigation, the cost of that claim is doubled merely by the defense costs that are spent on that claim. So it's in your best interest to resolve a problem before it becomes litigation to control the outcome and the costs. And look, let's face it, a claim that's paid out, money that's paid out, there's no such thing as insurance company dollars. It comes back to you in the form of increased premiums, higher deductibles, less coverage that you're able to get. So that's what it does. Who's covered? The firm is the named insured. It covers the firm and the owners, officers, employees, and agents as independent contractors doing work on behalf of the firm. Let me demonstrate an example of that. If you were with ABC Realty and you left and went with XYZ Realty and you're sued when you're with XYZ Realty on a transaction that occurred when you're with ABC, the policy that will respond to that claim is ABC Realty's policy because that's where the transaction was done. You see that work done on behalf of the firm. What that means is as agents go from firm to firm to firm, their E&O coverage, if they're sued, is going to reside with the firm where the transaction was conducted, assuming that firm is in business, has E&O that covers it. That's the policy that would respond. So I just want to make sure that's clear because there's some confusion on that. Now also, coverage is triggered for a claim by the named insured. So if you were ABC Realty and you changed your name to ABCD, I come up with really good names, ABCD Realty, but you don't tell your insurance agent that you're ABCD Realty, and we see this happen all the time. If ABCD Realty is subsequently sued on a claim, you turn that claim into the carrier and they say, well, we don't have ABCD Realty named. You could have a coverage issue unless the carrier wants to be nice and cover it. So you want to make sure that you constantly communicate with your insurance agent on corporate and DBA names and any operations that you're involved in so you can ensure your insurance is coming with and affording the coverage you need. Additionally, that E&O myth, the E&O policy for the firm does not extend to agents' own LLCs. Many agents have their own LLCs where they're conducting real estate activities, which is typically buying and selling homes or things of that nature. And the firm's E&O policy does not extend to the agent's own LLC. They need to get their own coverage. And again, I think there's a misconception out there that it would just be picked up under the E&O. So who is covered?
So we have one question for you, going back to then making sure the correct name is on the policy. So if you had a change of ABC Realty and then you changed it to ABC Realty LLC, would you need to let your insurance company know that too?
I would absolutely. My hope is, and sometimes we do see that subtle change, and you hope that the carrier, there wouldn't be a coverage issue, but at the end of the day, just let your agent know. Why? Let your insurance agent know of the change so there's no question. You just want to make sure. The point is we talk about asset protection. We work with our attorneys. We work with our CPAs in the asset protection. We forget that that's what insurance is too. And the insurance agent needs to be a partner in asset protection, and you need to let them know those changes. So, you might not have a problem, but to ensure you don't, then you need to make sure even a subtle change of LLC, you need to advise the carrier of. How much does it cost? We were talking about the fact that why E&O is important. I think in the past, E&O has been maybe unaffordable at some point, but certainly I don't feel that's the case today. If you subject E&O to a quick risk-benefit analysis, you'll see the annual premium, which is generally affordable, is well worth the protection. There's a couple of different ways that you can rate policies. There is now, we haven't had this in the past, but the last couple of years we have an express program which will apply to small residential firms that have no claims or complaints. And a small residential firm would be a firm just selling dwellings, 1 to 4 family dwellings. They're not leasing, managing properties, doing commercial, any higher risk activity. And their gross commission income on an annual basis to the firm is less than $100,000 to $150,000. So you can do a fair amount of business and qualify for an express program. An express program that you have qualifying questions that you need to meet, and if you do, you automatically qualify. There's no underwriting, and the premium is indicated right on the application, and the premiums range from as low as $369 a year to $663. The $369 is a low limits policy. Up to $663 is a $1 million policy, and again, premiums range based on limits and deductible. But if you look at that number, you're a small residential firm and you think you don't have much exposure. If you don't carry E&O and you're sued, what's the cost to see an attorney per hour? Probably $300 an hour. So for $369, you can at least get into a low limits policy that's probably going to give $100,000 worth of coverage, which will probably defend you and pay damages in that. Versus, what's the risk of not carrying it at all? Well, $300 an hour, and you have to defend a claim that, again, we know $15,000 to $20,000 at a minimum and virtually can be catastrophic. So that's a very affordable way as a small firm to get coverage. If you're don't fit into that express program, then you go to a full application that's underwritten. They rate based on the characteristics of your firm. They're looking at the size of the firm, that being number of agents, type of activity, residential versus non-residential. The more residential sales you do, the better your rate is. Prior acts coverage, risk reduction practices will develop rates on your credits on your premium. They look at percentage of use of home warranties, home inspections, SPUDs, continuing education, professional designations will all be beneficial to the firm and the premium. Claims is a big driver of your premium. If you do have claims, you're going to have more challenges in your premium. And then lastly, your premium for the upcoming year is based on your gross commission income for the last 12 months. So if you start off as a new firm and you anticipate doing $50,000 your first year, your premium is going to be based on that. But then after your first year, you're rating based on the last 12 months. If your premium's if your gross commission income went from 50 to 250,000. Understand your premium is going to go up. You're doing more business. There's more exposure, so there's going to be an increased premium. So understand the role that gross commission income plays in your premium. I will tell you it is a competitive market. There are lots of carriers out there, so I'm seeing that premiums are very competitive. So again, it certainly is well worth your while to go out in the market and get quotes to do that risk-benefit analysis to see what the cost is versus the risk of not carrying E&O insurance. Where do you get insurance, your E&O insurance? What I would recommend is, because it's a very specialized area of coverage, that you're working with a specialized agent in both E&O and real estate, because of the nuances of those to quote your E&O effectively. So there's several sources that are specialized. Well, several sources you can go to. An insurance broker. I'm an insurance broker. I work with multiple carriers, most of the carriers out there that I'm working with, but I'm representing my real estate firms, my clients. So you fill out an application, I send those out to the market. I'll shop it to the lead carriers depending on what you're doing, and then I bring you quotes back that are drilling down not just on premium but on those coverage issues that are important to you. So I'm like your buyer's agent. I'm representing your interests. The second type of agent is what I call a captive program manager. And those are agents that are program managers, and they're responsible for a program for the carrier. So they're representing the carrier, and they're responsible to the carrier for the management, underwriting, and results of the program. Now, they will sell direct to you, but they're not really representing your interests, because they're certainly not going to tell you their deficiencies in their program. And it's not likely that they might help you in understanding your exposures that might be higher risk in bringing that coverage to the table, because they might not want to offer that coverage. So they absolutely will sell direct to you, but understand that you have a greater burden to represent your interests, because your interests might not be represented by them. And then the generalist, and I think the issue there is they just lack the specialized knowledge of real estate and E&O. They don't. One of the things is, myself as an insurance broker specializing in real estate E&O, I have leverage at the markets. They know me well. I write a lot of business with them. I know the product inside and out. Generalists don't have the leverage. They don't have the knowledge, so it might not be in your best interest. And a red flag might be if you get a proposal from a carrier and they're not giving you anything more than a limits, deductibles, and maybe a premium. They're not telling you the coverage. That might be an idea that you might not be represented as well. So let's talk about the specifics of the E&O policy. E&O is very specialized, and understanding the nuances can be challenging. Even for insurance brokers, as I mentioned, the generalists who don't specialize in it, problems can result due to a lack of understanding of how it works. So it's unlike any other policy in the industry, and that's what I want you to be aware of. Most policies in the industry, like your homeowners, your auto, your general liability, are written on an occurrence form. And what that means is the policy provides coverage for claims that take place during the policy period, regardless of when the claim is reported. For example, you have an auto accident in 2013, you're sued in 2015, the policy that's in place when the accident occurred, 2013 response, hence the name occurrence. So we go back to the policy that was in place when it happened. E&O, professional liability, is written on exactly the other type of form, or another type of form. It works exactly the opposite from occurrence type policies. It's called claims made. Claims made policies provide coverage for claims made against the insured and reported to the carrier while the policy remains in force, provided the alleged error omission was after the prior actual retroactive date. So, example, you're sued in 2015 for a transaction that occurred in 2013. The policy that's in place in 2015 when the claim is made will respond as long as the prior act date is before that 2013 alleged error omission. I'm going to get to prior act date in a minute, but you see it works exactly the opposite. The occurrence policy, you went back to the policy in place when it occurred. The E&O claims made policy, you have to have a current policy in place to respond. And that's certainly challenging because in the distressed market, a lot of firms went out of business. They had E&O for transactions they were paying on, and then they went out of business, and they didn't have an E&O policy to go to, so those transactions are subsequently uncovered. And I'm going to show you that in a minute, but very different type of policies. So this retroactive date is very important. A retroactive date or prior act date, it's one and the same. It's interchangeable term. That's a date, and you should know this on your policy. It's when your coverage begins. It's essentially a trigger for your coverage and the date back to when a claim would be covered. The prior act date is usually the same date from which you first took out coverage and maintained continuous coverage. And claims that arise out of acts committed prior to the policy stated retroactive date are not covered. Now, there's an example, but Callie, go to the next slide because I want to show you an exhibit. I think it makes it clearer. So if you're a new firm starting out, you see policy year at the bottom. It's you opened up your firm January 1st, 2010. You have a January 1st, 2010, 2011 policy. term, your prior X date is the day you opened, January 1st, 2010. It went back.
Yeah.
Okay.
Whoa.
Okay, we're good. So you see, every year you renew your policy diligently. The current year, 1/1/15/16, we have a policy in place with a prior X date back to 1/1/10. This policy this year covers essentially 6 years of prior acts, and what that means is if you are sued this year in this policy period, 1/1/15 to 16, you receive a claim and you report it to the carrier, and it's on a transaction that occurred after 1/1/10, this is the policy that would respond. So that is demonstrating to you how that retroactive date or prior acts date works. So you see the importance of claims made. You have to have a policy in place. That prior acts date is the trigger. Now, here's the other misconception. Oh, I'm in my grace period under my E&O policy. Well, let me tell you, there is no grace period under a claims-made policy. I'm not sure any insurance has a grace period, and you really shouldn't work under that basis. But specifically E&O, when the policy is on its expiration date, that 1/1/16 date, the carrier can walk away from the policy. There is no provision for a grace period. So let me give you an example of what happens. Your policy renews 1/1/2016. That's a really bad renewal date because that's just holidays and people are too busy partying and not renewing. So you come back on the 4th of January and you contact your carrier and you say, hey, I got to renew my E&O insurance. And they say, okay, well, we'll backdate coverage. That's a red flag, backdate coverage. If you sign this warranty statement saying that you or your agents are not aware of any problems, threats, situations, anything that could reasonably be the basis for a future claim. In other words, you just warranted to the carrier that if you have any knowledge of any situation that could result in a claim, it's not going to be covered. So you have now presented challenges in your policy. So they'll backdate coverage, but with a warranty that they're not going to really pick up any threats that were known. And if you would have renewed before the expiration date, you wouldn't have that warranty. Now, another scenario that happens is that the policy expired 1/1/2016, your bookkeeper didn't renew it, you realize April 1st that the policy didn't renew, and you contact the carrier, and the carrier says, well, you lapsed your coverage, so we can't give you prior acts, we can't backdate your coverage. So, and you say, okay, I don't know what that means, but just do whatever you need to do. And this is what they do. On this slide, this exhibit, they put you in a policy effective 4/1/15 to 16 with a prior acts date of 4/1/15. So Callie, can you go back 2 slides to that other slide? I'll tell you when. That one. So you had that. You had 6 years of prior acts coverage. That's gone away. Go back to the, and now you have that. You have no prior acts coverage. It's gone away. You only have going forward insurance effective 4/1. That's a big deal. And I can tell you, oftentimes I have clients that come to me that had that happen and they have no idea because they haven't yet had a claim, or maybe they've discovered they had a claim and they don't have coverage because they lost their prior acts. No grace period under prior acts. So you ask the question, a claims made policy, what do I do if I'm no longer in business? Do I just carry the policy forever? No. What you do is you buy a tail or extended reporting period endorsement. So we know after the policy expires, you have no coverage unless you buy a tail or extended reporting period endorsement, which allows you to report claims after your policy is terminated for claims on transaction that occurred while your policy was in force back to the prior acts date. And I'm going to give you an example, but let me get through this first. You buy a tail for a specific period of time, 1 year, 2 years, 3 years, unlimited. It varies by carrier. So if you know you might need a tail, you might be asking that question up front. And it's the premium. There's additional premium, one-time premium charge based on the period of time. It runs between 100 to 200% of your premium. So for example, if you have a $2,500 annual premium and you want a 3-year tail that a carrier offers for 150% additional premium, you would need to pay $3,750 upfront before the policy expires. Now that's a $2,500 premium. Often these, firms have large premiums of $10,000, $20,000. When you're looking at 150 to 200% to buy a 3-year tail, it gets quite costly and becomes quite challenging. So this is what we're talking about. In the scenario where we have that policy that's effective January 1st, 15 to 16, with a prior acts date of January 1st, 2010, we've got 6 years of prior acts. You see we cancel the policy or we don't renew it January 1st, 2016, we cancel the policy, we buy a 3-year tail. That 3 years up to 1/1/2019, we can report claims that are made to us, to the carrier, for transactions from 1/1/10 up through the policy expiration 1/1/2016. So it's not giving any going forward insurance on transactions. If you didn't cease doing business but you canceled your policy and bought a tail and continued to transact business after 1/1/2016, it's not going to extend to those. It's going to give prior acts. So a tail is what you need when you cease your business. So, tips to ensure you don't risk losing your prior acts: work with a specialized agent who's knowledgeable about all these crazy nuances that are so complex and you shouldn't have to mess with. That shouldn't be your job. You have to focus on real estate. Take out coverage prior to transacting any business to remember any transaction before the prior acts date isn't going to be covered, and the carrier's not going to backdate that coverage. Make sure your policy is renewed every year, timely in advance of the expiration date to ensure there's no lapse. Understand that a lapse can result in a loss of prior acts. It's as though you never had coverage. If you pay your premium in installments, please make sure you pay those timely, because if you don't, the policy cancels for non-payment. You lose your prior acts and you don't have an option to buy a tail, so you're done. And understand your options to buy a tail if you cease doing business. Now, I mentioned the policy coverage disparities. And this is just kind of a list. We don't have time to go over this. I'm focused really on just trying to give you some information. Risk reduction we don't have time for, and how these policies vary greatly. This is some things that you need to look at. I just wanted to provide, but we don't really have time to work through it. So just being aware of some of those areas. Now, we talked about E&O. We need to understand that E&O covers claims relating to providing professional services when someone's financially damaged. And it doesn't apply to losses from auto liability, general liability, workers' comp, and so forth. So I want to talk about some basic coverage that you need to consider. First being the business owner's package policy. All right, that is a policy package that combines property and general liability. Obviously, property insurance covers if you have a building or business personal property. But what we're really looking to get is general liability insurance, which is a must-have. Can I poll you guys, would you mind? How many of you guys have general liability? How many of you guys know anything? If you don't know about it, that would be great to share too, because I think a lot of people don't know about it. Is that coming in, Kelly?
Yeah. While we're waiting for the answer, we just had one question. Why would someone not just buy an occurrence coverage policy versus a claims-made coverage policy?
Great question, because it's not available. The reason why is that because these E&O claims have such a long tail. If you say, how long can I be sued? Is there a statute of limitations? And again, I'm not an attorney. There is a statute. But the problem is the statute starts from date of discovery, so it's virtually unlimited. And we are seeing claims from 7 years and 10 years ago. So the problem is that there's a long tail exposure on when you can receive a claim. And so back in the 80s with asbestos claims, we were tapping into policies that were 20 years old that were occurrence, paying claims that there was no intention or no provision for reserves with these carriers to pay it. And that's when claims made came about. So great question. The problem is it's not available for real estate E&O. It's the only way you can buy your coverage because there's so much exposure. They can't, it's actually a cheaper rating based on claims made policy than it is occurrence.
So the answer to the poll is we have everybody has general liability, and quite a few mentioned an umbrella policy.
Awesome. Okay. So what is general liability? First of all, it's so important because E&O excludes general liability claims. General liability claims are claims resulting from your negligence that results in third-party bodily injury or property damage. For example, you are showing a property and someone slips and falls as a result of your negligence. Third-party bodily injury. That's a general liability claim. You hire a handyman to work on a property that you're managing. The handyman is uninsured. a fire ensues when the handyman was working on with a blowtorch, and there's a $40,000, and these are actual examples, there's $40,000 in damages to that property. Third-party property damage, direct physical damage to that property, general liability. Another standard claim we see, turning on utilities and the house floods because you didn't check it. That claim is going to come back to you for your negligence, third-party property damage. So those are general liability claims. And I will tell you, I mentioned an uptick in claims in my office on E&O, and also I have to say general liability claims we really haven't seen in the past, but we have seen just a flood of general liability claims. So it is a coverage you definitely need. I'm sure most of you find it's not an expensive coverage. If you're a small firm, you don't really have a large office. It is triggered off the property coverage, even though the general liability is a more important coverage. Just a minimum premium for a small firm is about $500 a year. So it's really well affordable compared to your exposure. I will say some cautions. Make sure your business owner's package policy, or specifically your general liability coverage, does not exclude coverage for real estate activities, property management, or properties in your care, custody, and control. I will tell you that I have reviewed many BOP policies from other carriers, particularly direct writers. They write a real estate firm and they put an exclusion for property management or properties in your care, custody, and control. When you show a property, that property is in your care, custody, and control. That's the insurance you need when you're off premises. And they exclude that, or they exclude your real estate operations entirely, meaning they're only giving you coverage when someone slips and falls in your office, which that is really not going to happen. Most of you don't have an office, or not an office that people are coming in. So that's a caution. Make sure, ask your agent specifically you don't have exclusions relating to this. Now, what's equally as important is that agents aren't covered under your general liability policy because they're an independent contractor. So this is a big issue that I've been talking about. The real estate industry presents unique insurance coverage considerations because the agents maintain an independent contractor status rather than being employees. Now, in E&O, we know that it's a real estate, your E&O policy is specific to real estate. So we know and understand that agents are independent contractors, and as you saw in who is covered, the agents are covered as independent contractors doing work on behalf of the firm. It's real estate specific. General liability, auto, workers' comp is a standard insurance industry policy used for all professions. And it covers the firm and the employees and owners. It doesn't extend to independent contractors because those are people typically coming into a business that have nothing to do with you and need to carry their own insurance. I'm not sure how many agents know this. At the end of the day, an agent needs to carry their own general liability policy or their own BOP policy. We actually had a couple of claims. One was a recent claim on a slip and fall. The agent was showing a property that had a sunken room, and the person they were showing slipped and fell, serious injuries, went after the homeowner's insurance, but also sued the firm and the agent for $125,000. Granted, there were some serious injuries, but alleging that the agent had been in that property, almost tripped on that step, and didn't warn that person. The firm's policy covered the firm, but the agent was not covered under the firm's policy and didn't have their own policy, so the agent is left with defending that claim out of their own pocket. So as a DB, you want to make sure in your independent contractor agreement that you let agents know they need to carry their own insurance, with the exception of real estate E&O, and to try to make sure you're not responsible for that. Just as a side note, I actually have a carrier that will write the firm policy and will add agents as additional insurance for $25 a year. So that's something that's very attractive for a firm and an agent. Instead of spending $500, you can get it for $25, but the firm has to be insured with them. Next, automobile coverage. Obviously, if you have an owned company vehicle, you need auto insurance. Most of us don't. So what's important on the automobile coverage is the non-owned auto. And this is coverage every firm needs because it applies to your business, to your firm, to the extent that it's liable for the actions of employees while driving their personal vehicle on company business. Any business has this exposure. And if that employee gets in an auto accident, injures someone, and you can imagine that can be a catastrophic type of claim, the insurance on the vehicle would cover the employee, but if they're on business, they're going to name the firm for their vicarious liability. And that's where you need the non-owned auto for the firm, for the employees. But again, let's make the leap to agents, where most of our exposure is. They're independent contractors, and because they're an independent contractor, typically the non-owned auto will not extend to your agents, because they're an independent contractor driving their vehicle on company business. That is why that we ask agents to carry auto insurance, liability limits that are decent amounts, and name the firm as additional insured on the policy. So if the agent is in an accident and injures a passenger or another person, that the firm, in the firm's name, the firm would look to the agent's policy where they're named to also respond to the firm. Automobile coverage. Okay, let's talk about cyber. Certainly our risks from cyber are growing. We're doing more, and one of the big issues is the security of this information, the protection. Arizona statute 44-7501 defines what personal information is, which is an individual's first name or initial and last name in conjunction with social security number, driver's license number, a credit or debit card with a security code that's not encrypted, redacted, or secured. The essence of this statute is the requirement that companies storing this personal information must promptly notify persons whose information has been breached by an unauthorized person. So what that means is that if you have this information and someone hacks into your system and that information is breached, you've got to promptly notify them. And if you do not notify them, there are potential civil liability or fines and penalties that can be assessed against you. So the question is, what information are you handling as a realtor? And when I go out and ask this question, I think in leases, we probably have this, or property management. Certainly your employees, you have this information. In short sales, we had a lot of this information, and so that short sales have kind of gone away, so not as much exposure. But it's important to know if you have that information, and that you need specific cyber coverage. I will tell you that E&O policies afford a minimal sublimit for some cyber protection. So you might have some minimal coverage for these notification costs, and we're going to talk about what your exposure is. But you need a separate policy. Now, keeping in mind, a failure of network security can be many different exposures, not just a data breach, destruction of data, virus transmission, cyber extortion. These are all the things we see. Breach of physical records, such as files tossed in a dumpster. I have heard of situations where someone had a bunch of files, real estate files in a car, and someone broke in to get that information. Human errors, such as a lost laptop, certainly with all of our electronic equipment we carry around at the airports, sending a file full of customer account information to the wrong email address. And complicate that for a real estate firm, we have agents running around with all of our information that we can be secure at our office, but we also have exposure above and beyond with agents and security in their homes or their offices or with their equipment. Oh, sorry, keep it where it was. Sorry. Okay. So you want to, if you look at your network and network security and privacy liability coverage, it covers both first-party costs and third-party costs that you would be responsible for. Your first-party costs are the direct costs that you would pay out of your pocket for a privacy breach that would involve forensics. So if someone breaches your system, you have to notify. Who do you notify? That's forensics. You've got to bring in forensics to determine who needs to be notified. In forensics, anytime you look at forensics, it's expensive. Legal advice, notification costs, credit monitoring, PR expenses. Think about the big breaches with Target and Neiman's and all the ones that we saw. You can ensure that their public relations expenses were quite significant. Even though they were getting bad press, they still are trying to mitigate that. First-party costs and third-party costs, which applies to, that's when someone sues you, they make claims against you, or regulators demand information, and it's going to cover the legal defense, settlement, damages, judgments, responds to regulatory inquiries and fines and penalties, which is that many policies do not cover fines and penalties. The cyber-specific does extend to fines and penalties because it's such a big part of that risk. Just food for thought. A couple years ago, someone cited a cost of $213 per record compromised as a cost for notification. That's $213 per record. If you had 100 clients, that cost out of your pocket would be $21,300. So understand your exposure, and if you're concerned, there's cyber coverage that you can look into. And it's not going to be a huge cost, but if you're concerned, check it out. A big issue, though, and I just was listening to a webinar this morning, this is a trend, wire transfer fraud. I've had several calls into my office, which is hackers that are hacking into agents or escrow companies' email accounts and diverting funds to an unauthorized account. I had a call from one of my insureds in Florida about a month ago. The amount of money that was diverted was $32,000. And the reality is that the FBI can't even track what these hackers are doing. And the banks are saying, sorry, your responsibility when it's pulled out of in one case, it came out of an account that I think funds were pulled out of the firm's account, and the bank held them responsible. So wire transfer fraud is a big deal these days, and understand you need cybercrime. It's not E&O, it's not general liability, that's specific coverage. More importantly, you want to mitigate. If you are sending instructions on where funds need to go, and I hope we're not doing that. I don't think we do. But if you do, you've got exposure because these hackers are looking for that. They go in and divert the funds, and they're gone. Are you responsible? I'm not an attorney, but there's a likelihood they're going to look to you. So cybercrime. Last, workers' compensation. Again, if you do have employees, it is mandatory coverage, so you want to look into that. And again, independent contractors would carry their own. So that really is the highlights. Keep in mind there's many, many other policies that you need. Employment practices, which addresses discrimination, wrongful termination, sexual harassment when you have employees. Again, that's a hot area of disputes. Employee dishonesty, employee stealing money. Again, that's a high risk type of area. Umbrella, directors and officers. Now, Kelly, you mentioned umbrella. And we have commercial umbrella here. One of the things I want to put out here, I get asked a lot, well, I've got an umbrella, and they mean a personal umbrella. Just so we can be clear, any personal policy you have is not going to extend to your real estate business operations. Personal does not relate to commercial. So when you say you have an umbrella, make sure it's a commercial umbrella that sits over your general liability, your auto liability. It's not going to sit over your E&O typically. E&O is going to stand alone on its limits, but it's great. Everybody should have an umbrella. So, and I just want to mention, I talked about drones, I talked about regulatory to start with, and we don't really have time to get into it, but what I want to make you guys aware of is that those are exposures that we're dealing with today that typically there's not coverage for regulatory, or we have to look someplace else to get it, directors and officers typically for regulatory. Drones, I think everybody's using drones. I'm hearing that, and there's typically probably not going to be coverage if it goes down and causes BI or PD, bodily injury or property damage. If there's a privacy issue, maybe, but not sure. So check that out because you can imagine the liability. So at the end of the day, I hope to have imparted, given you information that's valuable in protection of your assets. And my goal is to let you know so you can make an informed decision on the exposures of your firm and the coverage that you carry, and more importantly, where you don't carry coverage, that you can manage those risks and be aware that in the event of a loss, you have to fund those. So, I want to open it up are there any more questions?
Oh, we have one question that actually several of our broker attendees today asked, and let's talk about, just briefly, Lisa, that the additional insured, looks like maybe some brokers are getting some feedback or pushback from agents that balk at the additional insured because they say it costs dramatically more for their auto insurance.
Yeah, that's a great point. That's the challenge we have because agents are independent contractors on the automobile piece, and So an agent is driving their personal vehicle on company business. The first question is, have they disclosed that to their personal auto insurer that they're a real estate agent, because their rates are going to go up. So a lot of times they're not disclosing that. So when you take the next step and say, hey, I need to add my firm as additional insured, then if they haven't disclosed that, it's going to come out and cost them more money, just first in the rate. Some personal auto, and I don't do personal lines, but I know some personal auto carriers will charge for that and some won't. There is pushback, I agree. That's the challenge we have, and what you need to recognize there is the exposure you have, if they won't, that in the event that agent gets in an accident, you're going to have exposure. You can try to see if there's any way to extend the non-owned auto to agents as independent contractors and look at that wording, but it is challenging. So that is something that I agree. You guys are right, and it is a challenge, and there's not a solution, but you want to try to do that.
I think something else to consider is we have a webinar that Holly Esslinger did with us on brokers' policies and procedures.
Absolutely, I listened to that, yeah.
And I'm thinking maybe that would be something that a broker should have in their policy and procedure manual.
Well, absolutely, and a lot of these things I'm talking about the point is that we do need to address it in our policies and procedures or IC agreement. I'm thinking maybe the IC agreement, because you definitely want to tell your agents that, about the fact that other than E&O, they've got to get their own insurance, because what happens is when they're not covered, they're going to come back against you. And so, we need to talk about that. That auto is so important. That is a catastrophic exposure, and we kind of know about it, but we don't enforce it. Well, we're the ones that are taking the risk, because it doesn't happen often where there's a bad auto accident. I heard of one where the agent was driving on a freeway out west, crossed the middle line, and I think both parties were killed, and the agent was it was a real estate agent in one vehicle, and the firm was sued, and that's a $1 million claim. That, how do you address that? So important stuff.
I think, like we've talked about before, it's the broker's responsibility to protect the brokerage.
Exactly.
So the policies and procedures manual probably the way to go.
That's right.
So Lisa, thank you so much. Any closing comments today?
Well, look, I appreciate the opportunity to be here, and I hope that the information is helpful to you guys. If you have any questions, let me know. But my goal is to be a partner with you and letting you know the important things about protecting your assets and what you need. So it's great to be here, and if I can help you guys anymore, let me know.
And Lisa's contact information is up on the screen. Please feel free to reach out to her, talk to her. She and her staff, excellent people. They know tons of stuff about insurance and specifically real estate and insurance. So these are definitely our go-to people. If you've been to our spring convention in the past, you know that Lisa has been there even with a broken leg or a broken ankle one year.
Yeah.
So she is definitely our go-to person.
Yeah.
And so for the rest of the year, we have 2 more webinars to conclude for 2015. Coming up in a couple weeks is how to work with Canadian clients. Actually, it should be 3 webinars. Canadian clients coming up on December 7th. We have Broker University, our final conclusion for 2015 with unlicensed activity and assistance. This is with attorney Rick Mack. And for those of you that know Rick, this is a no-holds-barred conversation about what you can do, what you can't do, how you can pay them, what you can pay them, how you can pay them, and it's going to be super-duper good. We have the 3rd part of our TRID webinar series coming up in December as well. And for all of our webinars, you can find them on our website at aaronline.com/calendar. And for those of you that asked, I just want to remind you that today's webinar was recorded and will be available on our website. There's the wonderful link at the top, the aaronline.com/increased knowledge and webinar archives. All of our webinars are on this website from 2014, 2015. So if you have questions, our webinars are right there. We'd like to thank you so much. We know that you always have an option for education, and AAR so appreciates you supporting us in our webinars and our classes. I want to remind you we now have the brand new Certified Residential Property Management Certification Program. This is brand new from AAR. So if you're a property manager, we encourage you to take a look at that. And of course, GRI is brand new, looking at some good stuff for 2016. The 2016 calendar is available online right now, too, so you can visit their website at azgri.com. So, folks, thank you so much for joining us today. As always, if you have any questions, please feel free to reach out to us, and we hope you have a great day.